Good morning, everyone. Elaine Lowe and Ken Shreve here live from Investors Business Daily in Los Angeles. Today, we're checking in on Ciena, Costco, and Adobe. But first, let's take a look at those indexes, which are in rally mode. We have the Dow up about 0.5%, the S&P 500 up 1/3%, and the Nasdaq up 0.2% so far today. What's going on?
Well, decent open for the stock market today. We've had some sort of unsettling closes for the major stock indexes recent days. We get these strong opens followed up by selling in the afternoon, and so that is typical in a bear market. So I think the indexes are still a little challenged here. Here's a look at the Nasdaq. You can see it recently climbed back towards that 7,500 level and got turned away. So. We'll see if the Nasdaq can find its footing here. Fourth day of a rally attempt for the S&P 500. So everybody hoping for a year-end rally. We'll see if that can happen.
All right, and the first stock we're going to take a look at today is optical communications systems maker Ciena. Earnings up 66% to 53 cents a share on 21% revenue growth to $899.4 million, and we have that stock gapping up today. What's your take on this?
An outstanding earnings report. Big sales beat, big earnings beat. This is a compelling turnaround. We talked about it on the show yesterday, sort of previewing the report, and it was a really big sales beat for Ciena. You've got good annual earnings estimates here, so it's just a telecom gear maker that seems to be firing on all cylinders. You can see the stock gapped up over the 35 level. It's trading near its session low, but still a nice percentage gain.
Relative strength line also up. Looking at, is that a new high for it?
It looks like a new high for the relative strength line. You can see that blue line right next to the relative strength rating there of 95. So just a powerful move for Ciena. It was just under a 32.43 buy point headed into today's results. Bullish gap up, and nice performance for the stock so far.
Right, all right. And yeah, taking a look at that a little closer, it looks like that relative strength line is at a more than 4-year high right now today. Yep. Okay, so moving on, let's take a look at Costco, the membership warehouse. If you are a member, they're going to be looking at those numbers today because that's one of the metrics that they'll be looking at, their membership numbers, which is a big part of their revenue. In terms of the actual earnings, analysts are looking for 19% growth to $1.62 a share on 9% sales growth to $34.6 billion. Now, this has generally been a pretty solid retail name.
Definitely, and the latest pullback, you can see Costco has made a few trips already down to the 217 level and has found support. The depth of its most recent base, only 11%, so that qualifies as a flat base. Still has a ways to go to get to a conventional entry at 245.26, but this is a company, as you know, covering retail like you do, is really known for pretty consistent earnings and sales growth. So we'll see what the results look like for Costco. Trading right near its 50-day moving average. Relative strength line pretty healthy, even though the stock is still off its high. The relative strength line is near new high ground, so that's a positive headed into earnings.
And how would you say this one's been holding up amid the sell-off? I mean, it is bobbing around its 50-day, but not taking as big of a plunge as some other names.
No, definitely. I mean, you look at a lot of tech stocks. We're going to look at Adobe in a second, which has pulled back about 25%. You see 30, 35, 40% pullbacks on a lot of stocks, but Costco only about 11% right now. So it's actually held up pretty well. I think expectations are that we could see a decent quarter here.
All right, we'll be looking for those results after the close. Another one reporting after the close, that would be Adobe, like you mentioned. Analysts looking for 49% earnings growth to $1.88 a share on 21% sales growth to $2.42 billion. And this one, like you said, has pulled back in recent weeks, but now trading above that 50-day line.
Yeah, and we mentioned in the big picture last night that software stocks continue to see interest. It is one of the most compelling fundamental areas of the market. Adobe, really one of the first software companies to move to cloud computing several years ago. It was really a first mover in the space. We were just looking at its market cap, 120 billion thereabouts, and this is a company that is still managing to churn out 20% year-over-year growth on the bottom line and top line. So we're expected to see a 20% increase in sales again, this time around to 2.42 billion, earnings up 49% to $1.88 a share. So you do have a lot of software stocks that are hitting new highs. Several did yesterday. Adobe kind of trading around the 50-day moving average, right around that 250 level. So doesn't look too bad. Decent relative strength line. We'll see what the numbers look like.
Okay, and then any other sectors or areas we should be keeping an eye on today?
I'll tell you, software is just really compelling. Adobe is a sector leader in one of our exclusive stock screens, and I think 6 out of the 7 stocks there are from the software sector, so it's still a pretty good-looking area of the market.
Okay, good to know. For more on all these names, make sure you're reading investors.com. You can also check out all of our videos, both analysis and educational, on Facebook, YouTube, Twitter, and Instagram. Thanks so much for watching, everyone. We will catch you bright and early tomorrow morning.